Hello, everybody. Oh, I'm excited to be with you here today. As promised, on last week's episode, I was talking to you about writing my book and being very excited about writing a little bit, I promise, in a light and very understandable way. But I really am interested in tax policy and how we could create more fairness in our tax system. What I mean there is equity between taxpayers, the rich paying more, the rich certainly paying at a minimum their fair share, and lessening the burden on lower income taxpayers. So, in the interest of this, for my book, I've been doing a lot of research. I've been reading a lot of articles, meeting people. I interviewed an economist last week. I'm really excited about that interview. And coming up next week, I'm interviewing William G. Gale, who is an economist at the Brookings Institution. He's the co-founder. Let me look at his official bio before I tell you. He's the R.J. and Francis Fearing Miller Chair in Federal Economic Policy and a senior fellow in economic studies and the co-director of the Urban Brookings Tax Policy Center. So that's who William Gale is. And I'm interviewing him for my book, reading a bunch of really amazing articles he's written at brookings.edu, which you can find yourself, and I will link to them in my show notes. But I want to share with you today one of his articles because it's on a topic that I suspect he and I will be talking about when I interview him. And it's something that is actually real low-hanging fruit in the tax code. It's something that would be a pretty easy solve, or easy, I guess, with the Congress we have is maybe not quite the right word, but it would not take, relatively speaking, to other tax reforms that could happen. This one is pretty simple, pretty straightforward, pretty doable. So for that reason, I really want to read this article that he wrote where he's done the research. He's said it already in a way that's so good. I thought, well, why should I repeat what he did such a good job on? I just got his permission to read his article on the podcast today. So that's what I'm bringing you today. So here we are. This is an op-ed from William G. Gale of the Brookings Tax Policy Center. And the title is Give IRS the Tools It Needs to Enforce Tax Rules and Catch Cheaters. So here's the article by William G. Gale. President Biden has launched, oh, by the way, this was published in September 2021. So it's a couple years old, but even so, the information in it is all completely accurate. And honestly, I think as we head into election season, it's really important to understand where the two candidates, well, there's more than two candidates, but two real candidates. Sorry, that's my opinion. Two candidates stand, because this is what you're getting when you pull the lever in the voting booth. Okay, so here's the article. President Biden has launched an ambitious agenda to crack down on people and corporations who aren't paying the taxes they owe. That agenda, however, is being held up by financial institutions lobbying to avoid new reporting requirements. Common sense would reject their arguments against moving forward, and Congress should too. Treasury Department studies project that the tax gap, the difference between what people pay and what people owe, now hovers around $600 billion per year. More than 1 out of every $7 that are owed in taxes are not paid. This has occurred in part because IRS funding and staffing levels have gone downhill over the past 10 years. The noncompliance rate also depends critically on information reporting. Noncompliance is particularly low where third-party information reporting occurs. For example, employers routinely withhold income and payroll taxes on their employees' wage, send the funds to the government, and report these amounts annually to the worker. As a result, the estimated noncompliance rate on such income is around 1%. In contrast, Income from farms and sole proprietorships do not have such withholding or third-party reporting, and noncompliance in those and similar areas is estimated to exceed half of all taxes owed. The noncompliance rate for the wealthiest individuals who typically earn the majority of their income through investment income, facilitated through financial institutions, is the hardest to detect. But recent estimates suggest it is quite high, with a large majority of evasion committed by high-income individuals. This provides some perspective on whom the financial institutions are protecting by lobbying against the information provisions. In sharp contrast, as noted above, wage earners tend to pay all the taxes they owe. Enter President Biden. The first part of his plan would beef up IRS technology and staff on a sustained basis. Based on historical estimates of the return to enforcement activities, this would generate about $240 billion in revenues, net of added expenses, over the next decade, and presumably more in the years beyond that. The second part would boost timely information reporting by financial institutions, which the administration estimates would raise a whopping $460 billion over the next decade. The information would materially help the IRS in its efforts to identify likely and actual evasion. Opponents have put forth two main claims. The reform would not help the IRS as much as predicted, and it would place large burdens on financial institutions. The first claim misses the point that, as noted above, third-party information reporting is essential to increase voluntary compliance and root out evasion. Even if the proposal raises somewhat less than the predicted $460 billion, the revenue effect would be substantial. The second claim strains credulity. Financial institutions are quite capable of complying with regulations and are prompt, for example, to tell customers about even small overdrafts. Credit card companies are able to record even the tiniest transactions on a near immediate basis. The rules that the administration proposes would expand the use of an already existing form, the 1099-INT, and would pertain to information that the financial institution already has. A third argument put forth is that the proposal would somehow burden or harm moderate income taxpayers, particularly minorities. No additional burden or requirements, however, would be imposed on individuals or non-financial businesses. Despite some claims to the contrary, businesses would not be required to reconcile financial accounts and income tax returns. If anything, it would help ordinary, honest taxpayers by reducing the likelihood that they were targeted with audits, and there does not appear to be an added risk to taxpayer privacy. Right now, the IRS is trying to fight tax evasion with one hand tied behind its back. President Biden has proposed transformational policies that could substantially reduce tax cheating and thus make the tax system fairer for the large majority of taxpayers who are honest. Republicans and some Democrats have recently expressed concerns about higher budget deficits. Cracking down on evasion would be an ideal way to raise revenue without boosting official marginal tax rates. So that's the article, everybody. That's some food for thought for you. And I want you to take a think on it. Definitely send me any questions that you have. I may even include them in my interview with William Gale himself. So send me any questions or comments, any thoughts you have. Tell me if you are interested in learning a little bit more in a gentle way about fairer tax policy. And you can reach me at Sunlight Tax on Instagram. Just send me a DM. And I will talk to you in the next episode. Share this with a friend if you have a friend who's interested in fairer tax policy, is interested in what we could do to conquer income inequality and put more money into programs like the Earned Income Credit and other poverty alleviation programs, of which the IRS is one of the largest distributors. So I hope you enjoyed this episode, and I will see you on the next one. Bye. Thank you for watching. If you like this video, be sure to like, leave a comment, and subscribe to my channel. I'm so grateful for that. This video is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.